Yes, no. Open November 2016, question 1. Let us read. It says, so let's use this one to understand the entire issue in foreign. It says that H Group, a public limited company based in Kenya, owns 75% of the ordinary share capital of S Limited, a public limited company based in Rwanda. Okay, H Limited acquired S Limited on 1st May 2015 for 1,200 million Rwandan francs, when the retained profit of S Limited were 800 million Rwandan francs. The functional currency of H Limited is the Kenyan shilling. The functional currency of S Limited is the Rwandan francs. S Limited has not revalued its assets or issued any share capital since its acquisition by H Limited. The following financial statements relates to H Limited and S Limited. So we have the statement of financial position. The income statement we were also given, as you can see. Let's go to additional information. So additional information number 1, goodwill is reviewed for impairment annually. As at 30th April 2016, the impairment loss on recognized. The impairment loss on recognized goodwill was Rwandan francs 42 million. Okay, so we have been given impairment. During the year ended 30th April 2016, S Limited purchased raw materials from H Limited and denominated the purchase in Rwandan francs in its financial records. The details of the transactions are as follows. So nature of goods, raw materials, date of transaction, as you can see, selling price 60, profit percentage on selling price, as you guys have seen there. As of 30th April 2016, half of the raw materials purchased were still in the inventory of S Limited. S Limited issued an interest-free loan to S Limited of Kenya shillings 50 million on 1st May 2015. The loan was repaid on 31st May 2016. Remember, we are closing in April. So by the time we're closing, the loan had not been paid. S Limited included the loan in its non-current liabilities. You will subtract as intergroup what? Loan, yes. The fair value of the net assets of S as at the date of acquisition is assumed to be the same as their current value, meaning that there was no revaluation. H paid dividends of 80 million during the year 2016. These dividends have not been included in the company's income statement. Tax was 30%. It is the group's policy to value the non-controlling interest at acquisition at its proportionate share of the fair value of the subsidiary's identifiable net assets. You'll use full method. The following exchange rates are relevant to the financial statements. So when you want to translate on 30th April 2015 or 1st May 2015, use 2.5. So 2.5 Rwandan francs was equivalent to 1 Kenyan shilling. On 1st November, as you can see, and average for the year was 2. Required, prepare the following statements in accordance with the applicable international financial reporting standards. The consolidated income statement 10 marks, then consolidated statement of financial position. So let's start with those steps. So right there, step 1. Step 1 was to do what? You translate the income what? Statement. So translated statement of P&L, translated So we want to translate from Rwanda to Kenya. So Rwandan francs were in what? Thousands or millions? Yeah. So shillings are in millions. Millions. So how we calculate? So you can even write there step 1. So this is step 1. Step 1. So you just copy, go to the income statement. We just copy as we translate. So profit account, we said we are translating using which rates? Which rate are we going to use? Average. Unless, yes, unless otherwise stated, not unless stated, otherwise. Income statement, kuna kufa na average throughout, unless they restrict you to use this. Otherwise, average throughout. So go to the profit account. Where's the profit account? So revenue is how much? How much is revenue? 1420, correct? We are translating the subsidiary, S. So you consider the items of S. So that is 1420, very true. 1420. Rate we have said we are using 2. So to translate them to Kenya shilling, it is either we are multiplying or we are dividing. So hapo ndio shida inatokeana na wanafunzi kwa mtihani. If you multiply and people are supposed to divide, unakuta hiyo swali yako 0/20. If you divide and people are supposed to multiply, yeah, umemess. So can you translate? Then, or before translating, check and tell me whether we are multiplying or we are dividing. What do you think? Because it's something very small, but it can cost you something very dangerous. So Ngatia, Alex, Mohammed, Brenda, Karen, Charity, Damaris, Eunice, Ellen, Yogo, Vin, Jen, Janet, Judy, Kelvin, Wawili Apo, Kendi, Kenneth Mugoengi. I can't call all of you. Next time I will call those others. Are we multiplying or we are dividing? Multi-dividing, eh? And I don't want you to reason with the currencies at Rwanda inakuanga chini ya Kenya or Kenya chini ya Rwanda. Don't reason, because next we are compare dummy countries. So you don't reason from that perspective. So Mohammed is saying, please let us multiply very fast. Kevin is saying, let us multiply. Sylvia is saying, let us multiply. Alex is saying, please multiply. Online, almost 10 people from online have said we multiply. Anybody with contrary opinion? Is there somebody with a contrary opinion? We multiply or we divide? Nani amesimama na divide hata kama watu wanasema multiply? Nani amesimama na divide? Kuna watu wamesema this thing must be divided. Liwe liwalo. Sindio, so we divide. Nothing is divided.
Nothing is divided.
Siyasema nothing. This thing is to be divided. So tucheze na hiyo kitu, it is very dangerous because ukitranslate vibaya umemesi hiyo swali yote. 0. Eh? Usitetemeke, that is why I'm here. Check here. Hey, if you are not sure, this is what you do. Check the arrangement. So pick one. I just pick one, like the average rate. Average rate wameandika hapa juu wamesema 1 francs to Kenya shillings. So pick like the average. Average they have said it is how much? So what is the interpretation? The interpretation is two what? 1 francs is equivalent to 1 Kenya shilling. That is the meaning. 2 1 francs is equivalent to 1 Kenya shilling. Then just test with 1. Then once you test with 1, it will apply to everything in that question. So you can test with revenue. Therefore, what about how much Rwanda? 1420. It will be 1420 times. If I took about class 1, so you will divide throughout. So, so Mohammed, I think I've explained and we have understood. So check how they have arranged. Because some questions, they will give you dummy countries. Dummy countries, like there's one, next question we'll check, I think last city pilot paper. They don't have hope, something hope and I don't know what. So hope there is no country called hope. And so they give you dummy countries. So the arrangement is what will guide you. What is to what? So if they say to that one, then you flip that one to 1. And so I think that is okay. So we'll be dividing throughout. So if you divide this, what do you get? 710. So let's move very fast. Cost of sales. Cost of sales is 960. That is 2. 960 by 2, 480. 480. Sometimes you try to find analysis kama here today, but multiply. But in exam, nobody is bothering. Yes, nobody cares. So it is you and you know yourself. So arrange with sorry, but from what you will realize, almost all those questions are not divided. This is actually you will multiply. So I'm telling you, if you're not in a letter sheet, I will divide. I have a except the leo ilikuwa. So this one comes to, so GP, gross profit is 460, meaning this is 2. When you subtract to 30, we proceed. Distribution and admin. Distribution and administrative. We have 200 to 100, subtract. So that one will give us profit from operations. So profit, profit from operations is profit before interest and what? Tax, which you call EBIT, so 260. Then this one is 130. Then we have interest payable. Interest payable. Interest payable is 20 to 10. So this is 240. This is 120. That is PAT. That PBT. Profit before tax. Then income tax. Income tax. That is how much? 90. 90 to 45. So PAT actually tax there. Profit after tax, that will be 150. This one will be 75. Step 1, done. Unless someone has a question. Any question on the translated profit account? So there being no issue, let's go to the balance sheet, chap chap. Very fast. Bearing in mind, unajua kuna haja ni wadanganye. Bearing in mind hapa kuna tick hata moja. Hiyo ni working X. Hakuna tick. So you move fast. Kama ulikuwa umejiconsole kwa roho hapo naye Mungu. Au hakuna tick hapo. Hiyo ni working 1. So step 2. So you have to move very fast. There is no tick at that stage. You translate the balance sheet. Translated statement of financial position. Translated statement of financial position. Somewhere there. So Rwanda rate Kenya shillings. For the first time in history, I've seen CPAK trending. Mulona CPAK trending, but in negative way. Mulona CPAK trending. But it's going to trend vibaya. It was trending in the opposite direction. So what I kuuliza walikuwa nasema ni tukienda break utaenda kwa chapa yako uangalie what was the issue. Let's proceed. So go to the balance sheet. Tuandike vitu penye wameweka. Assets. Okay, the main issue was it has come to realization that people are misusing accountants. In the sense that mtu akona biko, akona CPAK, alafu unaambiwa they pretend that internship 15,000 to justify the low pay. So in real sense, you are an employee, but wanajifanya at internship 15,000. So it has come up to a time, simukimaliza tuta riot, no? Will bring problems. So assets, PP. What is story sign? 1460. Give me the rate to be used, kindly. This like to closing rate. I want you to tell me 2.5, 2.6, 2.1, or which one? 2.1. But Mohammed is saying kindly use 2.5. Assets and liabilities, we use the closing rate. Closing rate is the rate on the balance sheet date. So check, when are we required to prepare the balance sheet? 30th April 2016. So kindly check the rate which was prevailing on that date. 2.1. So 2.1. 2.1. So translate faster. So, but dividing two. Once you have identified from top, it is division. It will be division throughout until you finish. That one comes to 695. Those points. Give me non figures. 695. Next into which one? Current assets. Current assets is 10, 20, 2.1, divide. 2.1 divide, you get 486. Then there is nothing. So this is 2460. 2480. 2480. Add for me these two. The two added comes to how much? 1181. Equity and liabilities. Equity and liabilities. Equity and liabilities. Ordinary share capital. Ordinary share capital, 320. Do we still use 2.1? Historical, yes. Historical, you know shares on the date of acquisition. So check when the subsidiary was acquired. To just check when they acquired the subsidiary, then use the rate which was prevailing, or equivalent rate which was prevailing on the acquisition of the subsidiary. The subsidiary was acquired on 1st May 2015. On that date, what was the rate? 2.5. So you use 2.5. Translate. How much? What? 128. Proceed. Share premium, the same. Share premium. So share premium, that is 200. That is 2.5. 200, 2.5, what do you get? 80. Good. Then retained earnings. Retained earnings tangu izaliwe haijaikuwa mzuri. Hakuna retained earnings ya inaenda straight. Lazima kuwe na retained earnings must have issue. When was the balance sheet prepared? Kindly. 30th April 2016. Subsidiary was acquired when? In 2015. Here, this one is 2016. So the profits, you have to agree with me that the retained earnings they are giving us here, how much? 900 and what? 50. It includes the profit which was here on the date of what? Acquisition. But the profit which was here on acquisition must be translated as historical. Sure. So when you come to retained earnings, separate the two. Because the profit you are being given there includes what was there on the date of acquisition. So separate. So you say pre-acquisition, you are the just check where the question started. You'll be able to see the pre-acquisition. Pre-acquisition was how much? 800. Eh? Paragraph 1 or 2. Paragraph 2. S limited, or when the retained earnings from S were 800. So bring here 800. So that one will go at 2.5. That one will go at 2.5. Because that was, it is included in the 950, but that was on the date of acquisition. So you separate. That one will go at 2.5, which is how much? 320. Then post-acquisition. Post-acquisition. To get post, you subtract. Take the total, which is 950, minus what? 800, sure. So that one means after acquisition, they made how much? 150. But now the issue, hapa itakuwa rahisi, because this subsidiary is 1 year old, sure. So it will be easy. We know they made this one here. This one 50, when you translate it, 75. But in some questions, we'll find that subsidiary was acquired 4 years ago. So knowing the rate which was there during those 4 years. So what we normally do, you say here BF, that one will always be our balancing figure. Though here I know when we work it out, it will come to 75 because it was just 1 year old. But in other questions, you know what happens. This was the date of acquisition. Then after acquisition, assume this one was 2013. Then after that, they made another 150. So this 150 is in 2013, 2014, 15, up to 2016. You cannot know which rates because the rates keeps on with what? Changing. So you have to have a balance figure. So let's just start applying that. Then on translation, you must get something called foreign exchange what? Foreign exchange difference. Foreign exchange difference. So foreign exchange difference, of course, it will not be here. It will arise after translation. So that one should be our step number 3. When you check our step 3, that is what is supposed to be calculated in step 3. Please let it wait for now. We'll come back. We finish this other step, we come back. So this one you have to compute on your own. So add this, add this. So when you add all this, you should be able to get how much? 1470. Confirm? This one will leave it hanging. Sure, yes. All right, so just proceed with the rest. Then this is the letter. So the rest is non-current liabilities. Non-current liabilities, I can capture there 400 and what? 10. At which rate? 2.1. The one for the assets. So that is 2.1. Translate. One? 155. 195. Then current liabilities. Current liabilities, we have 600. 2.1, giving us how much? Sharp, sharp. Yeah. 286. Question. So total equity and liabilities. Total equity and liabilities. This one, when you add, I know you will get the 2480. Then this one here, assume that it will balance with 1181 as the assets. So just fix there 1181. 1181, yes. So now I want us to go to step 3. This step 3, one of these 5 days, I don't know why they are not doing that. It will be required, part of required Roman 1. Calculate foreign exchange difference on translation. So it is something you need to know. What do I can do sometimes, but you just have to know it, how it is done. So you say there step 3. Step number 3. So in step 3, let's get foreign exchange difference. Step 3, I'll be slow on this. Is sometimes students are like, but what alliance lazima wafanye kileto. So foreign exchange, foreign exchange difference. Foreign exchange difference. How will you get foreign exchange difference? And the difference can be a gain or it can be a loss. What you do, you check. You know when we are translating, what are we going to be translating? Assets, liabilities, income, expenses, and all that. So when you take all that into consideration, they will just come to net assets, which is equity. Because when you take equity, means you have taken assets minus what? Liabilities. And in the equity, there will be retained what? Earnings. And retained earnings, it will be income and what? Expenses. So when you want to check the foreign exchange gain or loss, just consider your net what? Assets. The closing net assets, and also you check the opening net what? Net assets. That is how you check whether you gained or you lost. So what you will do, you come here and say, translate closing net assets. Net assets are the equity. That is what you need to know. Net assets is equity. So translate closing net assets at closing rates. At closing rates. Closing rate is at the end of the year. Closing net assets. So can you check the total net asset? Net assets is the total equity of that subsidiary. The way it is appearing there. It is how much? 14? Another 1470. I want you to be there at that stage. What would I? So the closing net assets is 1470, which is the total equity. So you come here and say 1470. If we translate this at closing rate, the end of the year, which was 2.1, closing rate has been 2.1. How much do you get? 1470, 2.1, you get 700. So at the end of the year, when we translate equity, is 700. So we want to translate the opening net assets. So you say here, translate opening net assets at opening what? Opening rates. Translate opening net assets at opening rates. At opening rates. At opening rate. So opening net assets, how do you get opening net assets? You take the closing total is how much? 1470. So what normally brings the change in net assets? Net assets what brings the change, because you realize that ordinary share premium, those ones are constant. What keeps changing is the what? The profit. So profit is what brings the difference. So you take 1470, which is the closing, minus the profit for the year. Profit for the year is this one here. Profit for the year is this one here. 100 and what? 50. So you have the profit for the year. So if you have the opening, your opening plus 150 will give you the closing, which is 1470. The reasoning is ordinary and share premium are constant. So what brings difference in net assets is always the profit. Profit is what brings the difference. So to get the opening, take the total closing, then subtract profit for the year, which is 100 and how much? 50. Then you translate at opening rate. Opening rate is the rate at the beginning of this financial year or the close of the previous year. So we are closing on 30th of April. So check the rate which was there on 1st May. 2.5. So you translate at 2.5. 2.5 was the opening. Opening is at the start of the year or the closing of the previous financial year. So most students wanaendanga vizuri except this profit for the year. So make sure you utakuwa sawa. You take the total closing. What brings the change? Because shares are constant. What brings the change is the profit for the year. So just check the income statement. That profit is what you subtract the year safe. So what do you get when you subtract and translate? 528. So the argument is here. When we open on translation, net assets were standing at 528. When you translate at the end of the year, we are talking about how much? 700. So is that a foreign exchange gain or exchange loss? Exchange gain. Of how much? So 700 minus 528. Eh? 170. 172. Now, I want to know how much goes to the balance sheet. How much will go to the balance sheet? So you agree with me, listen to this. It's quite sensitive. 528, then it went to 700. And what made the change from here to there, we are being told is the what? The profit for the year. Of which profit for the year should go to the profit account. So when you check the profit account, this one here, on translation, that one gave us how much? 75. So this 172 during the year, there is 75 inside, which should go to the profit account. So what goes to the balance sheet should be the difference. So you come here and say less to P&L. P&L, we have recognized how much? 75 on translation. Because the difference from here to here is profit. And the translated profit for the entire year is giving us 75. So to get what goes to the balance sheet, you subtract what has gone to the profit account. So you say to SFT, how much? 90? 97. Push up. Push up. So that is how you calculate exchange difference. So you'll bring it here in the account. Bring here 97. So can you fix for me? Sorry, post-acquisition, this one. So take 1181 minus all this, then you give us that stage. So get that as the balancing figure. So you need 75. Yes, so have it there. When we are done. Total comes to yeah. I think I will use when you have the total equity translated comes to 700. You okay, so 700. Now check step 4. Ukimaliza step 4 swali imeisha. Because after step 4, step 5 is the last one. Step 4, what did we say? Determine, comma, translate, and goodwill arising on acquisition. So I want us to calculate goodwill here. So right there, step 4. So far, hakuna haja kutudanganya. So far hakuna maana. Hapo hakuna. Why should I lie to you? But I'll tell you what to do. Just wait. Yeah, let's just calculate goodwill, then we go for prayers. So that when we come back, we do presentation. Because that is the last, then we do presentation. So step 4, goodwill. Goodwill. So the standard requires that you calculate goodwill in foreign, then you translate so that you check whether there is foreign exchange difference. So goodwill will be calculated in foreign. In Rwandan francs, then we will translate. We'll translate that goodwill. So goodwill, of course, is the purchase what? Purchase consideration. Purchase consideration was how much? Upon paragraph 1 of the question, not 1, but paragraph 1. Acquired S limited is for 12. 12 is in Rwandan francs. Eh? Yes. So for 12. There's something they say. Take up fair value of noisemakers. Fair value of NCI. It was mentioned, but indirectly. So I want all of us to read note number 7. Check note 7. Note 7, they said, it is the group's policy to value the non-controlling interest at acquisition at its proportionate share of the fair value of the subsidiaries' identifiable net what? Net assets. That is what they are saying. Proportionate value of the net assets. So what you do in that case, what you do, wacha kwanza NCI wakae hapo, then you less those net assets. So less net assets acquired, of course. So the net assets, consider the ordinary share capital, share, premium, and retained what? Earnings. Retained earnings you pick on the date of acquisition. These two, pick them in the balance sheet. So ordinary share capital, how much is this? 320. So 320. Share premium, 200. Retained earnings on the date of acquisition was 800. Yes, 800. So when you add this, when you add the net assets, it comes to how much? 1320. So NCI, they have said the fair value of NCI was equivalent to their proportionate share of the net what? Assets. So parent was controlling 75. So NCI, it means their fair value, proportionate value of the net assets is 25% of how much? 1320. So take 25% of 1320. They were trying to hide, but they said proportionate share of the net assets on yield. So that is how much? This is 330. So when we know when it is full method, you don't apportion the net assets. So subtract this plus this minus this is goodwill. So goodwill will be how much? 210. So goodwill, I'm told, is 210. Funga. Translate that goodwill. So translated goodwill. Let me ask you a question. When is goodwill calculated? On the date of acquisition. So this goodwill was on the date of acquisition. On acquisition, what was the exchange rate? 2 points. On the date of acquisition, the rate was 2.5. So translate this goodwill. 210 divided by 2.5. That one will give you how much? So on the date of acquisition, divided by 2.5. 84. So this is 84. Then translate it today. So translated to date. Translated to date. To date means when we are closing. So that is 210. When we are closing, what was the exchange rate? 2.1. When you are closing, rate was 2.1. So 210 divided by 2.1, that one comes to 100. Yes. So tell me, was there foreign exchange gain or loss on translation of goodwill? Gain, yes. So foreign exchange gain. Exchange gain of how much? 16. Just hold it, it will help us somewhere. So that is 16. Quisha. You are successfully done with the work. So we are going to presentation. Otherwise, let's go and pray first. Then we come back for presentation. Examiner knows you are already tired. It will take us very few minutes. So turn it on. Let's go to consolidation now. I think prayer is over. Prayer is over. I'll need these two more than this space, so let me delete this one here. Mohammed, sawa, new swali litufinya, but at least tumeomba. So right there, the name of the parent was H. So write H group. There's a mistake I will not do today. To start another question, then I leave it hanging. Tukimaliza hii tunaenda nyumbani. Ikisha within 10 minutes we go. Ikisha after 3 hours pia ni sawa. I will just start. So right there, H group consolidated statement of profit stock loss. Na watu majani kusema hivyo kuna watu wanapea answers na roho moja. Year is ending when? 30th April 2016. I have one column, but now presentation is for which currency? Now we are presenting in Kenya shillings. So we just go the normal way now, the normal consolidation. The normal consolidation. So we start, we copy here, we consolidate. There is nothing which changes in the consolidation, so thank you. So revenue is what plus what? 2000 plus 710. Unapata mtu ametranslate alikuja huku tena anaandika 14 20. Stop what you are doing. Listen to this. In exam, don't waste your time with this thing. Yeah? Because the exam, your objective is not to balance the question. You know here, our objective is to balance. Yeah? Your objective is not to balance. So if you don't want to balance, this is what you do for profit account. When you talk alliance, we could have 2000 plus 14, 20. See, tunajua, we know that income statement we translate using average. Yeah? It's in average. And already average we know is what? 2. So we'll utakuja hapa 7, 14, 20. Either, which one will be better? Divided by what? Divided by 2. Equal. So what I'm trying to communicate is that you can do your translations here. So all those income and expenses here, you just divide by 2. So in your presentation, you start this divide by 2 plus this one. So you translate as you consolidate. So the reason as why I have to go this route, if you go this way, I need a balance because foreign exchange, you want what? you will miss like 2 things. So you miss it. Yeah, so in exam, here I have to do all those steps because of, and also I'm doing them because you see like what makes a difference. This one can be a question. So you need to know how it is determined. But in exam, you just take it direct, like that. So because now we are translated, now let's just present. So 710 minus intergroup sales. So can you check where the intergroup sales were? Yeah. Note 2, eh? So note 2, yeah, nature of goods, what selling price was how much? 60. So you eliminated full as we know. Don't bother whether it was upstream, downstream, sales, you subtract them in full, the way they are. So that one comes to how much? What are now when you buy let the answers? Okay. 2650. Cost of sales. Cost of sales. That is 1200 plus 480 minus again intergroup sales, which was 60. Then I want you to add back what? Unrealized profits. Actually, the other depreciation I go. So can you calculate for me UPI? Right. Calculate for me UPI. Calculate for me UPI without fear. Mohammed amesema 10 without fear. Is there anybody getting 10? 6. Moha, check. Sylvia is saying 12. Staki hata mtu mmoja akose UPI kwa mtihani because hakuna swali ya group either UPI and group is coming. So it means group is UPI is around. So everyone must know how to calculate UPI. Don't complicate the question. It's always straightforward. Where? The selling price was 60. Profit percentage on selling price was 20. Do we agree that is margin? So don't convert. When they say profit percentage on selling price, that is margin. Unless they say profit percentage on cost price. If it is on cost, that is markup. That is the one you convert. But on selling price is margin, so you don't convert. Then half of the raw materials remain. So half of 60. Then profit margin was 20, giving you 6. So I hope wrong. You take the profit margin times the one which was not sold. So plus 6. There was no depreciation. Other foreign examiners are where you are from translation. So how much is this? Is equal to copy figures. Let's understand what is happening. UPI we must get. Lazima to part. We can't miss cost of sales in the exam. When they say percentage on sales, that is margin, so you don't convert. Then you multiply with what remained and so on. So you get cost of sales to be how much? 60? 26. Okay. Therefore, gross profit you're saying is 1024. Proceed with their format. What are your format down? The next item they are giving us is this one. Distribution and admin. Distribution and admin. Please add 300 plus 300 plus 100 translated. The only problem is that administrative, with admin, we need to include impairments. Yeah? Yes, there was impairment in this question. I don't know if it was which note, but it was there. Note 1. Check note 1. Goodwill is reviewed for impairment annually. As at 30th April, the impairment loss on recognized goodwill was 42 million. So which rate are we using? It's in Rwandan francs. Which rate are we using? We are either using average or we are using the closing rates. Either of those two. Are we using the 2.1 or we are using the 2? Yeah. Which rate is applicable here? Being an expert, eh? Huh? Do we use 2 or 2.1? Wacha nisiwapee pressure, wacha nitembee pole pole kidogo. Argue. Mtu asione kuna pressure. So are we using 2 or 2.1? 2, yes, because repayment expense. Divide that by 2. So it was 42. So 42 divided by 2. 42 divided by 2. Because it should be classified as part of administrative. So 400, when you translate that one, it's 0.21. So 421. Yeah, so this is 421. You subtract. So you get operating profit, which is profit before interest and tax. Profit before interest and tax, that will be how much? 603. Bring interest. Interest, when you check it keenly from the question, and you check it keenly from the question. From the question, there is interest receivable and there is interest payable. Combine those things. Receivable is how much? 40. And payable, which we have translated, is how much? 10. So 40 is an income, while 10 is payable. Sure. So are we talking of 30? 30 positive, eh? Yes, that's interest income. Because the 40 is income, this is an expense, so you can net. Therefore, PBT, profit before tax will be 633. Income tax, there is no problem. I don't interest separately. I don't think, unless that person is malicious. Income tax, what plus what? 200 plus 45. Plus 45, you get to 45. Therefore, PAT, profit after tax, will be how much? 388. Actually, that's there. You just share now. So profit attributable to NCI, then holding company. All right, so we are not going to disturb ourselves outside there. NCI have been telling you the 3 items you need to adjust when you want to determine profit to minority. Minority, they take the profit after tax of the subsidiary. Yes, that is what we have been saying here. And there are 3 items you adjust. Which one, and which one? They are always 3. We check UPI if it is upstream. We check impairment if it is full. And finally, we check what? Depreciation. Those 3 items. So in this question, UPI who sold to who? H, S purchased. So H is the one who sold. So that is downstream. So UPI will not affect it. I just want to show you how you can do this one without struggling. So UPI, no. Impairment, yes. It was full method. Yeah, so they will share that impairment. There was no depreciation. So can you just check the profit after tax of the subsidiary, the translated profit after tax, the one we have translated? It's 75. So just take 75. Let's make us will take 25% of 75, but 75 you subtract what? Impairment. Sure. Impairment you have said it is 21 when you translate. So minus 21. So indicates the 21 where it is coming from. As simple as that, but you see that's not whether to put a foot or waste a lot of time. Even an example. In fact, LCI is one thing you should always get. People just fear it because of the name LCI. But it is very easy to calculate. So how much? 25, 75 minus that, 25? 13.5. 0.5 is something good. So that one we just can show. 13.5. So parent will take 388 minus 13.5. The total minus 13.5. So parent will go with how much? 370? 388. You could figure 10 ticks. Give me 5 ticks. Where are the 5 ticks coming from? Assuming you are correct in translation, where are the? I need 5 ticks here. You know how? Set is for how? The way I know you people. Interest is a part of whichever way you follow. You separate them, you combine. Income tax you must get. Another distribution unapata still. Ukijipanga tu vizuri unaipata yote. Yote. Let's go to the balance sheets. Yes. If I know what you want to ask. If you are not converted, you are not translated. Bado utapata. Sioni kwa nini usipate. Utapata because you'll get it. The reason being average. It's the average. Just take the PAT the way it's appearing there. That PAT itself divided by the average. So you'll get 75. Ilikuwa ngapi hapo PAT kwa swali? So ni 150. Divide that one with the average. Yes. Hizo working za kuna mtu ana mark. Ticks ziko hapa. Unaona hizi presentation. It is either correct or wrong. That presentation is what is marked. Hakuna mark. So that's why it's called advanced. You must struggle. Let's go to the statement of financial position. So write H group. H group consolidated statement of financial position. We're not talking about after 3 hours. Wait. Get the balance sheet for so far, so good. What are you for it? Should they bring? Whichever, no. So right there, H2. Consolidated statement of financial position as at 30th April 2016. So in Kenya shillings, in millions. So under your balance sheet, Nacheza, to the closing assets. This plus this one closing. Just translate them inside there. But then foreign is the only question you can do within 12 minutes, no matter 18/20. Yote. Because shida iko wapi? So let's start. Let's copy. Tupate hiyo yao. So here we'll separate. We say non-current assets. Non-current assets PPE. So PPE will be 2970. Are these things difficult? Yeah? Are they bad? How? Yeah? They're not bad. And this one is the one which is better. Generally, these things are not hard. Because, you know, number one, I know, within us, but let's not go that route. Within us, here, kuna watu walipata maths A in high school. True false. Hapa tu, si kuna watu walipata A. Sasa unaweza compare hii na hesabu ile high school that kuna train imetoka Mombasa. Ingine ilikuwa inatoka wapi? You calculate. Can you compare that with this? That was very dangerous. Now, what walipata A? This one is easy. Imagine taking 2970 plus 695. How difficult is that? All those days people were still fresh. Then there is no, imagine there was no revaluation, there is no UPFA, there is nothing. You just add. Another problem which arises, mtu anaona iko rahisi mpaka anashuka, anasema this is not a fact. Is this me who can just add a hapana? Mtu mpaka anarapu tena, anasema wacha ni assume hata depreciation department. Kama hakuna. How much is this? 36? 65. There was goodwill. Now, goodwill, caution, check where we computed goodwill. I've deleted mine. Goodwill to recalculate, we translated, we retranslated. Yes. There. Yeah. UPI affects stock. Don't confuse with UPFA. Ingekuwa kama ungeuza as a PPE, which was not there. Kama ungeuzia PPE, the UPFA comes out. So goodwill translated to date is what you check. It was how much? 100. But we have been told there is impairment of how much? 21, the one we have gotten there. So subtract impairment loss. Goodwill we calculated, we translated, then we translated to date. And we got 100. So subtract 79. Then there is nothing. Huh? There is loan. Loan to S. Loan to S. Loan to S limited. How much? 50. But again, you subtract the 50 as intergroup loans. Yes, intercompany loan, you don't consolidate for them. And for me, this total. Huh? 3744. 3744. Then current assets. Current assets. I said you get the quantity of 3550 plus translated was 486 minus UPI. So UPI equals stock. The stock is part of current what? Assets. So subtract and realize profit, we got 6. Was there intercompany debts? What? Was there something like that? So that we don't. Hakuna. Kuna? Hii loan tunajatoa as intergroup loan. 40, 30. Therefore, total assets So this is an advanced group. This one was not in section 3. But even advanced is now better than the other one. Total assets comes to 77, 77, 74. Equity and liabilities. Equity and liabilities. Mnaona ikiwa rahisi because mmeshazoea group sasa. Adiwa. Kama group nimekuzoea. So equity and liabilities, ordinary share capital, parent only. These things are not bad. Parent only 600. Hata unakuwa relaxed more. Huh? Share premium. Share premium 500. Retained earnings. Retained earnings inakuwa tuna issue. Retained earnings. Hata najua kitu mtu anasema kwa roho. Able to skip for now. Na sister yake NCI. Even that one, let's skip kidogo. Then on translation, they will arise what is called foreign exchange what? Reserve. Foreign exchange reserve will also be an issue to be considered here as part of equity. Things for thinking we don't want. Let's capture what we can capture first. Bearing in mind here you need 10 things. Hapa kuna 5, you have to get 10. Ukiona umekaribia 10, na hapo uko sure na 8. Songa mbele. Non-current liabilities. But human beings are very funny, eh? Very. The things you tell them not to do is what they do. Apple job. That is where they are. Now, not the apple. These of you, they are retained earnings and forgotten. Hata unaona wenye na set exam. Usifikirie hizo exam na setiwa ati kwani unafikiria hii account iko na gani? Design swali mpaka sita balance. Zishafanywa na watu kitambo. Mtu anaenda tu kwa KCC anachukua swali na answers. Hata yeye ukimwambia sasa fanya, anaweza pata 3%. Na wewe unangangana na retained earnings. Usingangana na mbaya. So you come here and say 300 plus translated was 195. But do we agree if that liabilities there was a loan? Yes, loan iliwekwa hapo ndani. So subtract that 50. This 50 you can indicate in your book it a group loan. Toa hapo na utoe pale. Utapita. It's a must. How much is that? 445. 445. Then we have current liabilities. Current liabilities, you add 2050 plus translated 286. And I want to intergroup debts to this question. Okay. Hapo ndio swali linakuwa rahisi mpaka unaona eh. Unajiuliza kwa mtihani are we together? So if you add that one, it comes to how much? 20? 2336. Total equity and liabilities. So let's assume that we are correct. The way you are always correct at 7774. Then we try to calculate. Let me start with NCI. So let's have a working for NCI. So NCI's equity. They are put on minority. So those minority, there are so many ways of doing it. Check the total equity of S Limited. I've just run it some few minutes ago here. The translated, check for me the translated equity of S, the total. It was 700. Yes, it was 700. So this is 700. Okay. Then that 700 does not include exchange gain on goodwill. So these people contributed to goodwill. It was full method. So it was full method, meaning impairment, they will be liable. That foreign exchange gain, they will also be shared because it was full method. So you come here and say, add foreign exchange gain on goodwill, because that is not part of equity. Foreign exchange gain on what? On goodwill. It was how much? It was 16. Yes, it was 16. Then you less impairment loss. It was full method. They will receive any income on goodwill. They will suffer any expense on goodwill. Impairment was 21. So the adjusted equity will be this figure. Then we give them 25%. Then they should keep quiet. So that is 700 plus 16 minus 21. Yeah. 695. Therefore, noisemakers will get 25% of 695. Why am I subtracting impairment from equity? Equity includes retained earnings. So impairment will affect profit. Exchange gain is a reserve. So 695 by 25, I'm getting 173. 173.75. One looks weird, but let us bring it there because that is what we have gotten. So here, let's have 173.75 for NCI. What was their fair value? You need to calculate value after goodwill. What is fair value of minorities? You need to calculate 25% of what? 1030. Or 330. Sure. Let's get foreign exchange reserve. So foreign exchange reserve. Foreign exchange reserve, there were two of them. There was one in the balance sheet. From normal operations, we got 97, 95. 97, eh? There was 97. Then on goodwill, we got 16. NCI have taken their portion. So parent will take what percentage? 75. So add the two foreign exchange. From this one is from goodwill. From goodwill, this is from normal operations. Then NCI took 25. So parent will go with 75%. So 75 of 97 plus 16, 113. By 75, 84. 84.75. 84.75. Let's pretend that now retained earnings is the balancing figure. Can you try that out? If retained earnings is the balance, it will be how much? Then we can check to confirm. So if we assume it is that, then it will be how much? 30? 36, 30? 0.5. Let's have retained earnings as a working. 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 So retained earnings, exhibit in the statement of changes in equity form. So retained earnings brought down of H, brought down of S. Then you add retained earnings for the year, parent. Then you less what? Dividends paid by who? Parents. Question. That's how we get it. All right, so retained earnings brought down. Retained earnings brought down for H. For H, do this. For H, do this. Go to the balance sheet, carry down. How much is their profit carried down? Huh? Profit for retained earnings for H. Are you seeing the 36? Yes. So bring here 3,600. 3,600. How much did they make for the whole year? So check the income statement of H. You check the whole year so that when we subtract, we get the gross down. Brought down for the year in the income statement. Are you seeing 340? 340, hold on. Check note number 5. Check note 5. Has paid a dividend of how much? 80 during the year. These dividends have not been included in the company's income what? Statement. So it means this profit we are seeing of 340, we are supposed to subtract dividends of how much? 80. So 340 minus 80. Yeah. 260. So the correct profit is 260. So take this minus 360, you will get brought down. So it is 36 minus in bracket 340 minus 80. You will get that brought down. So brought down, so 36 minus 260, you get 33, 3340, 3340. Okay, but then you put an issue. Then S already acquired 0. The reason as why it will be 0. When was S acquired? Huh? So it was 1st May 2015. So that was the beginning of the year. So when at the beginning of the year when we acquired them, their profit was how much? When was the profit of S on acquisition? So you got 800, and that 800 was utilized in goodwill computation. So you take 800 again minus 800, which will be 0. So the rule is when a subsidiary is acquired exactly at the beginning of the year, we no longer again consolidate for its profit brought down. You can put that one as a note, because that brought down is the pre-acquisition which we took for goodwill computation. So you don't consider it anymore. That is okay. Then for the year check income statement, the profit we got attributable to the parents. 370, 374, 374.5. Check the profit attributable to the parents. The profit attributable to the parents. Mayona. Income statement online, this one here. Then less dividends paid by parent. Now here we just subtracted to get brought down. So for profit for the year consolidated, subtract that dividend, which was how much? 8. So if we at all we were accurate the other side, you should get whatever you said. So 3340 plus that one minus 80. Are we not?
Yes.
Yes means 36. 34.5. That is correct. Bishop. Sub Ias, where are the 10 ticks coming from? We want the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Actually, there are exactly 10 ticks. So tell me the ones you get. There are 10. You have to get 10 ticks. Which ones are you getting? PP. For now. Like if next time I want to find it. This one you will get. This one. That one. How about this? And even this one. So you can get 1, 2, 3, 4, 5, 6. So here you can get 6 over 10. The other side you are getting 8. 8 over 10. And without struggling, you can get 14. One group of 14. So I don't want to give you assignment. The assignment, this is the assignment. The question we have done is the assignment, but we'll do one more question. Probably the pilot paper you can go through it. So let's meet in our next class. Our next class is when? Saturday. Thank you. But foreign ikuje tu hivyo. Unatoka bure. Ufanye hii alafu angalia pilot paper if you can do something. So thank you. Online you can log out. I want to end the class. Actually, I have 2 recordings yesterday and today which we have not captured. So we need to collect them. Thank you. Thank you. Thank you. Unasoma kweli? Unajua saa zingine nikaa kwa matatu naona ati watu wanasoma. Unasomaje hesabu kwa matatu? Hesabu unaweza soma kwa matatu ati NCI. Maana anasoma in transit. To some, the best time to read the FAR is between 2 to 5 a.m. 2 to 5 a.m. That is the best time for a FAR. That is not you. That is the best time to read a FAR.